Hello, my name is Todd, and I am an accounting and business tutor at the San Juan College Student Success Center, where success matters. In this video, I'm going to show you how to create an installment note amortization schedule using Microsoft's Excel application. Some items are too expensive to buy outright, such as a home, a vehicle, capital equipment, or even a business. In these cases, an individual or firm must take out a loan by issuing a note payable to a bank or other financial institution for the funds necessary to make the purchase. What is an installment note? An installment note is a note payable, an obligation, that is repaid over a series of payments, or installments. Payments are typically equal in amount and include the accrued interest plus a portion of the principal, the amount borrowed. When the last payment is made, the note has a zero balance and is considered paid. What is an amortization schedule? It is a schedule showing all payment dates, the amount paid, the interest charged, the principal reduction, and the current balance after the payment is made. There are several pieces of information you must have before you can create an amortization schedule. These include the amount borrowed, the principal, the interest rate, also known as APR or annual percentage rate, the number of payments per year, and the number of years that payments will be made. Once you have this information, you are ready to begin. Please start Excel and open a blank workbook page to follow along. In this example, we will create an amortization schedule for a 15-year mortgage loan on a $500,000 farm with a $100,000 down payment. So the loan will be $400,000. Interest is 5% APR, and there are 12 payments per year made on the first of each month. As you can see, I have already filled in many cells with the basic descriptive information used to create an amortization schedule. Please pause the video and take a few minutes to format your Excel workbook page to look like mine. Don't worry if the colors you choose are not exactly the same. When you are done, start the video again. I will wait. Now I will show you how to fill in the remaining cells either with direct information or with the required formulas. When you are done, you will know how to do all of this by yourself, and you can even customize its appearance for your own needs. The first thing I want you to do is select cells B9 through C13 and then drag them down to row 188. This will give us our payments and our dates for each payment throughout the entire schedule. Next, in cell C2, enter $500,000, and in cell C3, enter $100,000. In cell C4, we're going to enter the formula to show what the mortgage loan actually is. Put in an equal sign, click on cell C2 minus cell C3, and then hit enter. And there's our total mortgage loan of $400,000. In cell F2, enter 15 for the number of years that the loan will take place. In cell F3, put in 12 for the number of months in a year. And in cell F4, we're going to put in a simple formula to show the total number of payments. Put in an equal sign, click cell F2 times cell F3 and hit enter for 180 total payments. In cell I2, I want you to put 0.05, and in cell I3, we're going to enter a simple formula to determine the monthly percentage rate. So put in an equal sign, click on cell I2, divided by cell F3 for the number of months in a year. Hit enter. So the annual percentage rate is 5%. The monthly percentage rate is 0.417%. In cell I4, we're going to insert a bigger formula to determine the monthly payment amount for this loan. Put in an equal sign, put in a minus sign, and type in PMT. You'll see a drop-down menu appear with PMT highlighted in blue. Select Tab on your computer, and now you'll see that it's added a parentheses to the formula and that the PMT payment tooltip has appeared. The word rate is in bold to show that this is the argument that we are about to enter. So for the rate, we're using the monthly rate. So click on cell I3, add a comma, and you'll see that NPER has now been bolded. This shows that the next argument is the number of periods over which this loan will take place. And that is in cell F4. Add a comma, and now you'll see that PV, or present value, is now in bold. That number is the amount of our mortgage loan in C4. Now you'll notice that the following FV and type in the payment tooltip have brackets around them. That means they are optional and are not required to finish this formula. So go ahead and enter a closing parentheses to your formula and hit enter. And you'll see that the monthly payment amount is $3,163.17. The reason that we added the minus sign to the formula right here is because this will generate a positive number. Without the minus sign, the payment function generates a negative number. And for our purposes, we need to have it shown as a positive number. For the moment, we're going to leave the total principal, total interest, and total paid cells blank until we've finished our amortization schedule. Now we're ready to generate the amortization schedule itself. In cell D9, we're going to start with the beginning balance for the loan in its entirety. Put in equal sign and click on cell C4 and hit enter. In cell E9, we're going to show what the monthly payment amount is that we determined previously in cell I4. Put in an equal sign, select cell I4, and then I want you to hit the F4 key at the top of your keyboard. This will add the dollar signs indicating that cell I4 is an absolute reference and will not change as we drag the formula through different cells. For the interest expense in cell F9, we're going to put in the formula multiplying the beginning balance for this payment period times the monthly percentage rate as we determined in cell I3. Once again, I want you to hit the key F4 at the top of your keyboard, indicating that cell I4 will be an absolute reference and will not change. For cell G9, showing the amount the principal is reduced for this first payment, we're going to put in the formula showing the amount of the payment from cell E9 minus the amount of interest paid from cell F9. Hit enter. And now in cell H9, we're going to show what the ending balance is of the principal amount. Put in an equal sign, reference the beginning balance in cell D9 minus cell G9, the amount of principal reduction, and hit enter. And there we are. At the end of the first payment period, our balance of the principal, the loan itself, is $398,503.49. Now for payment number 2, the beginning balance in cell D10, we are going to reference cell H9, the ending balance from the first period. That's a real simple formula, just referencing another cell. For the payments in E10, you can select E9 and simply drag it down one row. Because we used an absolute reference, the dollar signs in the formula, it will always reference cell I4 as we drag the formula to different cells. For cells F10 through H10, we're going to drag the formulas from cells F9 through H9 one row down. Now we are ready to complete our amortization schedule in one big jump. Please select cells D10 through H10, and using the little handle in the bottom of cell H10, drag all of the formulas down to row 188. As you can see now, in the cell H188, we have a $0 ending balance for our loan, indicating the loan is completely paid off. You can see here in rows B189 through H190 that there is some more descriptive information. You can take a minute to add that now. When you're done, click in cell E189 and go up top to your ribbon under the Editing group and click Auto Sum. You will see that the sum formula is entered and is highlighted. All you have to do is click Enter on your keyboard. And that will show that the total paid 180 payments times $3,163.17 per payment equals $569,371.41. That is the total amount that we paid for a $400,000 loan over 15 years. You can now select cell E189 and drag the formula over through cells F189 and G189. Cell F189 shows that we paid $169,371.41 in interest, and that the principal reduction amount, the principal paid, is a total of $400,000, which equals the amount of our loan. If you go up to cell L2 now and click on that, we're going to bring the information from the bottom of the amortization schedule to the top. So click here and put Enter. Click in cell G189 and hit Enter. In cell L3, put an equal sign and reference cell F189. And finally, in cell L4, reference cell E189 and hit Enter. And now you'll see in condensed form at the top of the screen the exact amount paid for this loan. This concludes the Creating an Installment Note Amortization Schedule video. Please feel free to comment or ask questions in the comment section below the video. You can also ring the bell to receive notifications when new videos are posted. You can subscribe to the Student Success Center YouTube channel, and don't forget to check out and like our Facebook page. You can also request a tutoring session, either face-to-face or online, for additional assistance in learning how to create an installment note amortization schedule. All links are in the description below. Thank you for watching.